I don't even know how many times you've been on now, Jordan, but his name's Jordan de Jong, return guest, repeat guest from Gameplans. How are you, bud? You all right?
Mate, I'm very, very well. All the more better for seeing your face, that's for sure.
Exactly. You too. I love you're almost starting to look like the lead singer in Nickelback with that haircut too.
Yeah, it's one of those things that I think moving to the Gold Coast, it's almost a have to. If you've got the
Yeah.
ability to grow a mop,
Yeah.
you may as well grow one. So
Yeah.
yeah, it's just been one of those things. I haven't even thought about going to the getting a haircut yet. So, but I'm enjoying
Saves
it.
money. It's good for saving money. I tried getting a haircut in the Gold Coast when I was there, and I looked at the prices and thought, I'll wait till I get back to Dubbo.
Probably why we've all got long hair.
Yeah, might be it. Well, do you want to just give people a breakdown of who you are just before we move into sort of what we want to chat about?
Yeah, for sure. So my name's Jordan. I run a company called Gameplans. It's essentially an online software as a service business where we help people map out and build portfolios for their clients. We predominantly work business to business, so businesses will use us and walk their clients through their strategy and their portfolio. We work with about 140 businesses across Australia and New Zealand. So it's been a really cool journey over the last sort of 2.5, 3 years since I've been doing it, and really just love, getting to know the investor community, building new things into the system that people ask for or request for and all that sort of stuff. And just getting to work with investors on their journey to help them get financial freedom as well.
Yeah, for sure. Real briefly, like people probably think of property markets like there's either booms or busts, but where do you see the property market uh, at the moment? I guess if you want to be specific to the Gold Coast where you are, we can just do that. But like, how are you seeing it from your view of looking at all the numbers that you're getting?
Yeah, I think overall, really, it just comes down to supply and demand. And the quote unquote boom that we saw slightly after the COVID period was really a borrowing driven boom where we had access to a whole lot more financing. So 18 months ago, you could typically borrow about 7.5 times your income. And what happens when you can borrow more money is you've got more money to spend. And so if mum and dad are negotiating on property number one for their beloved princess daughter, they're not going to be too shy to pay another 20 grand, another 30 grand, another 50 grand to secure a house that might be around the corner from them. That's their dream home, right? So all these people had more money that they go out and spend on more property, which ultimately drove up the price of property. And I guess sort of what happened after that is interest rates increased. Consumer confidence went a little bit lower because no one really knew what was going to happen or how much interest rates were going to increase. And so we did see a little bit of a leveling out, not anything significantly. Like the property market didn't drop crazy, crazy numbers. Some places it dropped by, I don't know, 15% at an absolute worst. Other places continued to grow. So it was kind of more of a bit of a spread across the country when we went through that season. And then since interest rates have kind of leveled out, I think everyone has a little bit more confidence. I wouldn't say that we're going through a boom right now. I'd say that we're kind of just figuring out what the economic cycle that is that we're leaning into. Interest rates have just gone up again for the first time in about 4 or 5 months. So, everyone's still a little bit on their toes in terms of where we're going to be and where
Yeah.
we're at. But I think ultimately, if we sort of look ahead and, what's going to come, the immigration numbers coming into Australia are absolutely phenomenal. They're at the highest rates that we've ever seen before. I think, don't quote me on this, but it's like close to 500, 600K people coming in a year into Australia. And if you put that on top of, natural birth and increases as well, there's a lot of increase in the population and the cost of construction is increasing significantly. Our housing supply, what's currently happening is our housing supply is, not coming down, but not growing at the same rate as population growth. So it's going to be interesting to watch it over the next couple of years, I guess, given that we're in an environment where lending is a little bit constrained, but we've got all this population coming in as well. So I get the feeling that the market at the moment might be just underpinned by all of this new migration that's coming through. And that's definitely getting us through the season of being able to borrow a little bit less. But as we come out of this season of interest rates being a little bit higher than usual, who knows what's going to happen when we've got two drivers of both borrowing and, somewhat people need a place to live. And so we've got those immigration numbers coming in as well. So I wouldn't say going through a boom or a bust. It's kind of more of a leveling out and let's see where we're going. But obviously I'm talking holistically across the market. There's thousands of sub-markets within markets as well, which all perform differently as well.
Yeah. Okay. The reason we're going to chat is like, go through, I guess, your investing journey from start to sort of where you're at now. So yeah, like, do you want to just give us, I guess, a summary of like, you know, where you came from, your background, and how you got into investing? And then at some point, I want to sing, "Oh, fantastic!"
You saw that, yeah. So,
Yeah.
so for context, I sent
Yeah.
Damien a presentation that I did last week. And, one of the slides got fantastic, and everyone's blown up, being like, "What? Your dad created fantastic furniture," which is a pretty crazy story in itself. But essentially, long
Yeah.
story short, Dad was in an ad that said, "Is this the most annoying man on television?" It was in the Sydney Morning Herald or whatever, and I always stir him up about it and give a bit of a joke. But at the end of the day, it was just a marketing ploy. He used to run TV ads that was super annoying. So he got a bit of attention back in the day. But he ended up selling it before it IPO'd. So I'm not like this multi-billionaire. I wish I was, but didn't happen that way. But ultimately, in his later years, after the season of Fantastic Furniture, ended up becoming a bit of a high-end real estate seller. So he used to sell, $2 to $5 million properties like 20 years ago. And through that, he met a whole bunch of like high net wealth individuals, and all of them end up becoming family friends. And we used to always go to these family dinners together. And, I hated going to the dinners, but most of the conversations were really, really good. And it was either that they talking about a business that they worked on, which they gathered wealth, or, they had residential property, which helped them in their sort of net, like have their net wealth and grow their net
Yeah.
wealth as well. So my biggest takeaway was, property's good. And I think from then it's kind of always been this thing in the back of my head of I need to invest in property. I need to invest in property. But it took me a while to buy my first one. I didn't buy it until about 2016. And it essentially came up as a need for my wife, or my newly wife. Like I think we settled on May 14th or something. He got married on May 28th. So it was really just a place for my wife and I to have our first home. But then I ended up picking up Steve McKnight's book after the wedding, and decided that I wanted to become this property investor. And so pretty aggressively kept accumulating the portfolio after 2016 until ultimately we got to a point where we couldn't borrow any more money, which is where the story continues. But yeah, does that sort of give you a bit of a
Yeah.
gist of
Yeah.
my
Yeah.
upbringing?
Yeah. And so, like, for people who may not know, if you have unlimited cash for deposits, you can buy properties that way if you have that cash in reserve. But a way a lot of people will buy to acquire a bunch of properties in a portfolio is buy a place, pay off a bit of the mortgage, it grows in value, and then you use that growth that you've achieved as equity. So you basically use it as a new deposit. So you're not putting down any more cash that you've saved. You're just using like money that's in the ether, that's perceived value that you've grown from that first purchase you bought. So is that sort of the way you did it? Like, how was it that you acquired as many as you could in the time you did?
Yeah, essentially that. We got pretty lucky on the first one where we had a bit of growth pretty quickly on it, and then we were able to extract, I think it was like another 100 grand or something like that as borrowable equity for purchase number two, and then continue on that time horizon. We now had two properties that were growing in value. I didn't think we extracted as much, but we might have extracted like 50 grand from each or something like that. And then kept building it that way, where you've got all these multiple properties growing for you, which you can extract. That on top of having a fairly decent salary as a 23-year-old really helped with the saving side of things. And also I got married quite young. So I was married at 24, I think. So we essentially had double incomes from a very early age as well, which helped us save pretty significantly. But I've got a Dutch background, and so every cent counts, and it kind of has up until today, really. So I've been pretty prominent in like my budgeting and making sure we've always got cash put aside and good cash buffers, and then obviously leveraging off our existing portfolio to keep financing these things. But yeah, even if you do have enough deposit for another property, at some point in time, the bank will say you can't borrow any more money. You've exceeded your 6 times income rule, meaning that there is a limit for everyone. And so ultimately, we ended up hitting that limit, I think, in 2021, where we really just decided that we needed to think about what we wanted to do out of the portfolio rather than let's just keep buying property for the sake of it. We went through the season of, well, what do we really want out of our property portfolio, rather than just getting rich, because, you got to have a purpose for things, and getting rich is nice, but it's not purposeful. It's an outcome of something, but doesn't really drive purpose in life.
Yeah. And so before we get to like the Gold Coast part, something I'm thinking about a bit recently, just because I'm noticing it, like obviously to get the deposit I built up, which I used to sort of get into the market for myself with my first house, I was quite CD about my money and quite planned it all out, very far in advance. And if to make sure that everything was sort of accounted for. And I didn't really go out a lot. I didn't really leave my apartment much in Melbourne. I didn't go out drinking. Like I was very, very intentional about how I did it. But now I'm finding I almost have a really obsessive mindset about keeping track of all my money, and it's starting to be a detriment rather than a positive. Like, did you fall into a similar trap? And if so, like, how do you work your way out of that?
Yeah, so I think spot on. I went through the same journey, especially having, started working really, really early and starting on, like $12 an hour or something like that. Every dollar really does count when you're earning so much every year. And so I used to have a full Excel spreadsheet with literally every single bank transaction, where it went to, how much I was spending, what was the category of it. I then used to, have like a pie chart of all the categories and sort of see what percentage is going towards where, and really accounting for every single cent and dollar. And I think it's a great place to start, because you really do understand the value of money by doing that. And you understand the value of, well, is going to this dinner for $100 per person, is that really worth it to me? Like, yeah, it's a great experience and I'm sure it's nice food, but if that sets us back, if we do that once a month and it sets us back $1,200 a year, then, is it really worth it? And so it's just about putting a price on what you feel is valuable. And I think that's great to start. But the way that I dug myself out of it was, realistically, I was just trying to figure out how much I was able to save per month. Like that was just the key metric to me. And I apply this a lot to business now, as well as, what are some of the key metrics that I want to follow and pursue, not analyze every single little thing that happens under the hood, but what's the ultimate outcome. And so what I landed on was, essentially all I would do is just get my bank statements every month. And I just keep a record of how much was in or left over in my savings or offset account on the first of every month. And what that gave me was a bit of a true indicator of, regardless of what's happening under the hood with all of the incomings, with all of the outgoings, all the ins and outs and everything else like that, I could take a bit of an average and just say, well, every month for the last 6 months, I've been able to save around $5,000. And so then that becomes, the goal or the trajectory or thing that I want to stick to, rather than counting for every single dollar and where it goes. What would happen is, if I had a month where I only saved $2,000 or something like that, that's when I would then delve in and go, oh, I went on a holiday this month, or, oh, I actually started getting 2 coffees every day instead of 1. And you could really start to delve into that month and go, okay, well, where's the problem, and find the problem once it's there. So I think the first part is you're trying to solve a problem that doesn't exist, or at least just trying to understand where the money's getting distributed. And then once I think you feel like you have good control over your money and how you spend and where you spend it, then you can loosen up that discipline a little bit and just go, I feel confident in myself. Let's just do a high level analysis and make sure I'm happy with that. And if I'm not happy, then we can delve back in and readdress the problem.
Yeah, okay. I get what you're saying. Yeah. Also, like, what mistakes do you think along your investment journey do you think, obviously you can't change any of these things, and you can't, you might not end up where you've ended up if you didn't have make those mistakes, but what were those mistakes that you look back on and sort of wish, you could let other people know about to avoid for, or watch out for, or pitfalls, I guess?
Yeah, 100%. I think, the biggest one is probably listening to people who I thought were industry experts and industry knowledge. And I think the truth is, within any industry, everyone's kind of got an agenda around something. And so I wish I kind of listened to everyone and really got everyone's take and opinion, and then done a little bit more of a deep dive and analysis on what I believed in and what I really pursued. So I had a budget for each of the properties. Let's say roughly I could borrow around 500K for each purchase that I did. For me, the concept was, you have to get as close as you possibly can to a CBD. And so when you've only got 500K to spend, you want to get close to the CBD, well, it generally takes you to the outer skirts, generally means you have to sacrifice in terms of asset class. So it means that we moved into things like, 2-bedroom units or townhouses or something like that. And the assets haven't performed badly, but when you compare it to something like a nice block of land in Perth or Adelaide, I could be in twice a better position than I was when I bought these types of assets. Now, yes, all markets go through their cycles, and hopefully the ones that I purchased will, go through their cycle over time and come back around. But I just think that I purchased too many of those assets of the same type of asset class, and really could have diversified it, across different states and everything else like that. So I think diversification is a big one. Listen to multiple different people out there, no matter how much experience that they've got, and really just find what resonates the best with you. Understand that everyone has an agenda, and you need to really resonate with that agenda rather than, doing something that you don't want to do. And then the final one is just understanding that there is going to be a point in time where you can't borrow anymore. And so each individual asset within the portfolio has to have a key purpose. There has to be a reason for it. And ideally, because of the transaction costs of property, it costs 6% to buy a property and 3% to sell a property. You really never want to sell one because the cost to trade is just so high. So every single property needs to have a purpose, and it really needs to be a great asset. And so all I would say is, it doesn't matter what your budget is, just try and get into the best possible asset that you can across the country, with the money that you have at that point in time.
Could you repeat that bit just sorry, because I'm going to write it down. You said for the transaction types, like the benchmark was what, 6% to buy?
6% to buy, yep. So that's your stamp duty, building and pest, conveyancing, everything else like that. And then about 3% to sell. So that's your agent selling fees, solicitor fees, everything else like that on the exit as well.
Yeah, right. Yeah. Didn't have to pay stamp duty, baby. Woo!
Oh, that's great.
Thank goodness. Yeah, that stuff gets annoying, right? It's like you wonder sometimes with all the taxes involved, they're obviously still around because they make a bunch of money for the government, even though they might not be the most efficient taxes, but they sort of are what they are, right? Like, I'm not sure either of us are going to change them. Not ideal, though.
Yeah, no, 100%. It's the problem is it's one of those things that was originally put into place and kind of made sense at the time, but now that the cost of property is exorbitantly increased at a greater rate than inflation, and the rules haven't changed, the proportion which we pay towards stamp duty hasn't been revisited. And I think, the state governments absolutely love it. So why would they change it?
Yeah. Yeah. I was talking to a guy earlier today who his name's Michael Blythe. He spent, I think, 15 years at the RBA, 20 years at Combank, and now he just does sort of like advising work as an economist. And he was talking about, how he's thinking of, from what he's working at now with a company called Downsizer, with providing like a financial instrument to help older people who want to move out, sell their existing property that might have a bunch of extra rooms available, to then downsize to something that suits their needs better, in hopes that it frees up a house for like someone reaching that family formation stage. Because I guess the idea is people need to move out into bigger houses once they have kids, and there doesn't seem to be enough of those houses available. Let's try and figure out a way to help older people out of those homes to free them up for people that need them. And like, that's sort of his take on part of how the housing crisis or the supply crisis could be sort of fixed. Like, from what you're reading or what you're thinking about, what would your 2 cents be on like how to sort of reduce what's going on with property demand and just seeming like a shortage of property for people to buy or to rent? Like, what's your 2 cents on all of that stuff?
Yeah, I think it ultimately comes down to, construction at the end of the day. I think we could definitely go back into a season. So if you look at the numbers and statistics out of the ABS of when we went through the COVID period, the amount of co-living spaces significantly decreased, which means sick of living with someone else or being stuck and locked in a home with them for so long. So they either moved back in with family, or they went and got their own place, or something like that. So I think there will be a shift towards, people starting to live together again as housemates or flatmates or something like that. That would be probably the immediate, easiest solution, just because we already have the availability in terms of stock levels and rental markets and everything else like that. But if we're talking about a little bit over the long term, we really need construction to outpace the rate of immigration. And that's, that tap's been turned on really, really high lately. So we just need to it's nothing that I can do or nothing that you can do, but it just feels like the construction game has become a lot harder. There's definitely been a lot of construction companies that have folded over the last little while, which doesn't help. But there should be some sort of incentives from the government to continue to help build new houses, which ultimately will increase supply and level out the supply demand curve.
Yeah. I feel like it's becoming more of a popular topic to bring up, but I remember it felt like there was only like 2 or 3 people maybe 6 months ago saying, hey, we're saying there's a supply shortage, but we're just bringing in heaps and heaps of people to add to demand. So like, why aren't we talking about demand? And now I think Peter Costello just talked about it at a conference, and it seems to be becoming part of the zeitgeist now. So it's a bit late, but
Yeah.
it's weird having a house, because you feel bad that all of this is happening, but you also feel bad because you're also profiting from it indirectly. Do you know what I mean? Like, I'm in a great position now. I own a house. I'm going to be good as long as I can just like hold on to it.
Yeah, I know, but you've got to also remember that you were the one who sat there and diligently went through all your budgets and had OCD around your financing
Yeah.
and your budget. And that's a big delayed sacrifice as well. I'm sure there's many people who were in your shoes who didn't do that and went out and, spent $200 on a night out twice a week and in a very different position to you. So I don't think it's something that you should feel bad about, but something you should be proud about in terms of the decision making.
True. Yeah, that's true. Well, is there anything you wanted to talk about?
I think that all kind of covers some things off. I think if there's anyone out there who's wanting to get started, I think that the main thing is just stay focused on what your goal is. Make sure you have some good professionals you surround yourself with. Keep listening to podcasts like this and really get everyone's 2 cents in terms of what their thoughts and opinions are. And as I said, just stick with what resonates with you the most. And everyone has their own journey and unique story. So yeah.
Yeah, easy. And so I still get the emails for Homefront and all that. So do you want to let people know like what's going on in your world, or how they can sort of keep in touch with what work you're putting out there?
Yeah, 100%. Feel free to follow me on any socials. I'm pretty active on LinkedIn and Facebook. But we've also got a daily newsletter called homefront.today, which is just the latest updates that come through in the property market. And we keep it really short and simple with 5 dot points for the day. So it's a bit of a 30-second read each morning to keep you updated. And then if you want to delve into the article a little bit more, there's all the links and everything there as well. But yeah, it's just a quick way to keep updated with what's going on rather than having to sit there and shift through news articles for 30 minutes every morning, which is quite distracting as well.
Yeah, for sure. Yeah, keeping abreast of like, not only from a broking perspective, keeping abreast of like new policy changes and stuff can just eat up your entire day before you've even gotten any emails done. So it's a real short, sweet, concise way to get a little bite of the news, right? It's pretty sick. It's pretty sick.
Thanks, man. I appreciate it.
And did you say it's AI?
Yeah.
That's
So it's
sick.
all, it's really, really cool. So we, it searches the web for the most sort of shared or updated or viewed articles, and then grabs that, summarizes it all, and then it's unique to the end reader. So say someone lives in Victoria and doesn't want to hear anything about Queensland news, it won't send you anything from Queensland. It'll stay Victoria based, or vice versa. So we get some AI in there, which is pretty cool.
Yeah, okay, easy. Well, I'll turn this off before we get out here, but thanks again for your time, Jordan. Always love it.
No dramas. I'll speak to you soon.
See ya.